Hello and welcome to Brass Tack Presentations. My name is Reichert. I'm an enrolled agent, a certified financial planner, and the owner of Brass Tack Presentations. And today we're going to be looking at how the One Big Beautiful Bill Act, or OB3, changed or modified bonus depreciation and Section 179 expensing, and how some of the more peculiar rules surrounding 100% bonus under OB3 are going to kind of impact our decision making for whether we decide to use bonus or Section 179 expensing. Let's go ahead and dive into it. So the first big change is that OB3 reinstituted 100% bonus depreciation, which is a great change that they've made because under the Tax Cuts and Jobs Act, the bonus depreciation rates were phasing out over the next couple of years. So for 2025, the rate was set to be 40%. For 26, it was set to be 20%. And then for 2027 and for all future years, we were going to be down at zero for bonus depreciation. And historically, this is in line with what they've pretty much always done for bonus, right? There have always been periods in the past where they've phased it out, and then as the phase out is occurring, the legislator steps in or Congress steps in and they increase the percentage and expand it out for a period of time and institute another phase out. That's what they had done before Tax Cuts and Jobs Act. That's what they did with Tax Cuts and Jobs Act. The difference here with the One Big Beautiful Bill Act is that there is no phase out on 100% bonus going into the future. This is a permanent change. There will not be a phase down that occurs as long as the property was acquired and placed into service after January 19th of 2025. So the key distinction there that's different from what we've seen previously is that not only are you placing it into service after that January 19th of 2025 date, you've also acquired it after that date. If you acquired the property prior to that or on or before January 19th of 2025, then you're not eligible for 100% bonus on that property. And you're going to be stuck with the old Tax Cuts and Jobs Act rate drop that's set to occur. So if you had bought a piece of property on January the 1st of 2025, but then you didn't place it into service until later in 2025, you'd be subject to 40% bonus. Or if you bought it Jan 1 of 25, but you didn't place it into service until 2026, you've got 20% bonus that is going to apply. So for those pieces of property, we're going to have a problem where we're going to have to kind of work with the client to see, do they really need the immediate expensing of this capital asset, or can I just go ahead and depreciate it under makers and call it a day? The fix to that, though, if you have those on or before January 19th of 2025 acquired assets, you can choose to apply Section 179 expensing. Now, people don't like 179 expensing often because 179 expensing has recapture provisions that apply. But here's the thing. The only time you're really going to take something out of your business and use it personally, typically, is for things that are listed property. And people think, well, bonus depreciation doesn't have recapture, but that's not actually true. If you apply bonus depreciation to listed property and you use it 50% or more for personal purposes, then you're going to have bonus recapture, okay? Because there is bonus recapture for listed property. So the whole concern about 179 recapture, I don't find to be as valid as some people make it out to be. Okay, so we can apply 179 expensing to those assets that were acquired on or before January 19th of 2025. And they increase the amount of 179 expensing, or the dollar limit, up to $2.5 million. So this is up from the old $1 million that we got under the Tax Cuts and Jobs Act. And further, they increase the phase-out threshold for 179 expensing up to $4 million. Okay, so now you could have bought and placed in service $4 million of Section 179 eligible property before you'll start to see a decrease on your $2.5 million dollar limitation. So these are all really good changes. And the nice thing about that Section 179 increase is that it's applicable since Jan 1 of 2025. So for the entire 2025 taxable year. So for those clients who acquired their capital assets on or before January 19th of 2025, the simple fix is to just apply 179 to those assets and then just use 100% bonus for the remainder of the assets. So these are the primary changes that we saw come out of the OB3 for bonus and 179. If you want to learn some more about these changes and the kind of the strategies that we're looking at implementing for the 2025 year and for future years as well, come to our update seminar. It's going to be in December and January. We're going to be hosting that at 19 different locations over the state of California, all the way from down in San Diego up to Northern California. I think we go as high as Redding in our tour. And then we'll also be doing 2 other sessions out in Nevada, one in Reno and one in Vegas in January of 2026. So we look forward to seeing you all there.